The United States housing bubble has officially burst and property values are in free fall with no end in sight. A shift has started after 2 years of outrageously large and unsustainable skyrocketing price growth, and as a result, homeowners are already witnessing the sharpest rate of property value decline since the Great Recession. As mortgage rates hit the 7% threshold and home sales continue to decline nationwide, this recession is deepening far more quickly than analysts had predicted. We're about to experience the largest housing catastrophe of our era, and the repercussions will be devastating for the American economy because the vast majority of markets are overvalued by 50% or more. So what are the main causes of this terrifying crash? How bad will things get before they get better? And how will this affect you? In today's video, we will be answering these questions as well as informing you about the details of the worst housing crash of this generation. The National Association of Home Builders stated last week that the third quarter's 1.37 percentage point decline in U.S. GDP due to sluggish home construction was the largest housing contraction since 2007. As a result, total mortgage applications are now lower than during the mortgage boom. At the same time, mortgage purchase applications fell by 42% year over year. Sales of homes are likewise in free fall. They decreased in September for the 7th consecutive month. Sales have decreased the most dramatically in the West, down 31% from the previous year. Meanwhile, countrywide pending home sales plunged by a startling 35% in a month, the highest mortgage rates since 2002, all of which is possible. 7% is a new high for this month, according to information from the Mortgage Bankers Association. That means that even if prices keep falling, housing will continue to become less affordable. On the other hand, they have increased by 13% over the year, 5% over the past 6 months, and 42% since the start of the health crisis. The biggest irony in the market right now is that even while home prices are progressively declining, housing costs are continuing to rise to record highs. According to Axios's analysts, someone who purchased a median-priced home in September as opposed to June would have paid 5% less for it, roughly $427,000 instead of $450,000. However, they added, assuming a 20% down payment and a 30-year mortgage, that person would face monthly mortgage payments almost 10% higher, at $2,260 per month. The company reported that monthly principal and interest mortgage payments on the median-priced property had increased painfully by 73% or $930 over the past year. In the first stage of this new bubble's deflation, which is expected to last through the end of 2022, a Wall Street economist recently predicted that home prices would fall by 20%. However, Ian Shepherdson, chief economist at Pantheon Macroeconomics, says that after that point, tumbling demand for houses amid sharply rising mortgage interest rates add immense pressure on home prices. Financial analyst Bill Holter says that this is neither a buyer's nor a seller's market, but rather a situation in which everyone loses, and warns that a catastrophe is imminent that will make other crashes blush. Many folks will abruptly lose everything. All signs indicate that this is just the start of a terrifying catastrophe, and this new crash will be much more destructive than what we went through in 2008. Everyone is beginning to feel as though things are about to get pretty ugly as severe weather is heading our way. The housing market has gone from bad to worse. I wish you luck if you plan to buy or sell a home in 2022. The cost of home ownership has grown by tens of thousands of dollars as mortgage rates have risen faster than at any time in history. Since they can't even locate a property to buy, many individuals view this issue as irrelevant. The number of available homes is still roughly 40% lower than before the pandemic. Good luck looking for a new rental if you want it. As demand soars in the absence of available units, the average rent has increased to an all-time high. To explain all of this craziness, one could use a straightforward tale about the property market. There was an increase in interest rates, and that was it. But when you enlarge the view, the image is listed more precisely. The whole history of the housing market in 2022 begins with the raging dumpster fire of the world's financial crisis at least 15 years ago. The U.S. real estate market imploded and brought down financial markets as a result of years of reckless lending. From 2006 to 2012, there were 6 straight years of home price declines. As the 2010s turned into the worst decade ever for home building per capita, the number of new homes under construction fell to a troubling low. The American housing market might have appeared to be dead 10 years ago, but several things came together to give it new life. The largest generation in American history, the millennials, entered their prime home-buying years just as the housing supply all but stagnated. College grads moved into downtown districts, driving up rents dramatically in the biggest cities in America, and then they moved out to the suburbs. Mortgage rates also decreased to a 50-year low. A rise in property prices was inevitable given the constrained supply, soaring demand, and rock-bottom prices. The Case-Shiller National Home Price Index reached new record highs each year in 2017, 2018, and 2019. The pandemic then began. A virus that destroys normalcy caused the economy to endure a flash freeze slump in March 2020. Due to the housing meltdown of 2007, which left them scarred, homebuilders withdrew as the economy came to a grinding standstill. For the second time in 15 years, nobody wanted to overbuild, but they were seriously mistaken in their hopes. Disastrously incorrect, the real estate market in 2020 will be nothing like it was in 2008. The housing market went nuts in the opposite direction from imploding. Even while normal families couldn't or wouldn't spend their money on entertainment, movies, vacations, amusement parks, the federal government nonetheless delivered payments to more than 100 million households, making many of these households richer than they were before the pandemic. Families with money made Zillow the new Amazon because they were sick of being cooped up in their homes. The white-collar labor class, thrust into a work-from-home experiment, drove demand for larger homes with greater room for at-home offices. Remote employment was a major contributor to the increase in home costs, according to a study by the Federal Reserve Bank of San Francisco. After 2007, supply surpassed demand, causing a long period of falling property prices. However, after 2020, demand exceeded supply. First-time homebuyers currently have every right to believe that they are the victims of a terrible cosmic joke. The housing crisis in the late 2000s increased unemployment and decreased aggregate demand, making millennials poorer. Due to the collapse of the construction sector in the 2010s, there were fewer new homes available, which raised costs. A pandemic struck the nation horribly in 2020 and 2021, causing a run on homes that unexpectedly sent prices through the roof. And within a few months of 2022, mortgage rates rocketed from century-high levels to all-time lows. I don't believe in curses, but if anything in this world is cursed, it is the American property market of the 21st century. Will it ever again be affordable to purchase a home? Home values in some markets are historically more affordable than the national average gap today. To return to the historical average in Baltimore, home values would only need to decrease by 3%. Chicago's 10% and Philadelphia's 10% have substantially smaller required decreases than the national average for housing affordability. On the other hand, for prices to fall to historical affordability norms, they would need to drop the most in Miami at 33%, Tampa at 36%, and Dallas at 38%. Mortgage rates have skyrocketed in recent months, making it more difficult for Americans to finance homes. This is largely because the Federal Reserve has increased interest rates 5 times to contain inflation. According to Zillow, the average monthly mortgage payment has increased by 55% since the beginning of 2022. The upshot is that the housing market is now considerably less active. Due to the higher cost of borrowing for a home purchase, fewer purchasers are placing bids on properties. This issue is frequently linked to the pressure on housing values to decline. According to Zillow, many purchasers will be required to lower their expectations regarding the kind of property they may buy because housing prices and mortgage rates are currently so high. Some buyers are narrowing down their search to smaller homes for obvious reasons. The housing market is showing some symptoms of softening. In the last 3 months, home values have decreased, according to the National Association of Realtors. Since Redfin started keeping track in 2012, more than 1 in 5 properties that were up for sale last month experienced a price decrease, a record pace for the epidemic. The analysts at Zillow predict that in the upcoming year, property values will essentially remain constant. Some housing economists are more pessimistic and predict a drop in prices. However, given the current state of the market, few experts anticipate a 25% price decline, which is what would be required for housing to once again become accessible. But it isn't just the American economy that is in deep trouble. This is a global issue being worsened every week with bad news story after bad news story. The United Kingdom is on the brink of an economic and societal collapse that could shake up the entire world. Find out more by checking out the video on screen now. Subscribe to the channel to stay in the loop.